Pantheon AI presents Fintech Stocks Rally, Virgin Galactic surges, Coinbase joins S&P 500. Welcome back to the PAI Morning Briefing.
And good morning, everyone. It's Friday, May 16th, 2025.
That's right. Thanks for joining us as we navigate another day in the financial markets. Let's just dive right in, shall we?
Absolutely. Let's start with a quick market overview. Looking at the S&P 500, it's sitting at roughly 5,922.2 right now.
Okay, so a slight dip there, about negative 0.116%.
Yeah, just a little bit down. Meanwhile, the Dow Jones is showing a modest gain at approximately 42,360.
Oh, okay, a positive move there. Around 0.0109% up. Not a huge movement, I guess, but a gain is a gain.
Exactly. Gives investors a bit of a breather on the Dow this morning. Now, over at the Nasdaq, the numbers aren't painting the best picture.
Oh, really? How's it looking?
The index level is around 19,102.2, slipping by roughly negative 0.257%.
Got it. So a mixed bag across the major indices then.
Pretty much. Now, in the world of digital assets, Bitcoin is holding steady at about 104,025.75.
Wow, still over 100K. And it's up slightly, right? Nearly 0.263%?
Yep, holding its ground. And Ethereum, that's on a noticeable upward swing, trading at around 2,595.2.
Oh, nice. Almost a 2% jump there, close to 1.849%.
Yeah, a good move for Ethereum. Now, these percentages might seem small compared to the big indices, but the crypto market, as many of you know, still holds the potential for volatility and outsized returns.
That's a good point. It makes you wonder if all that extra caffeine those crypto traders drink is finally paying off.
Haha, possibly. All right, let's pivot into a deeper dive on some major market trends that have really been capturing investors' imaginations lately.
Okay, what's top of mind?
One of the most talked about stories on our radar is definitely the resurgence of fintech stocks. If you haven't noticed, fintech is making a robust comeback.
Oh, absolutely. Headlines have been echoing this theme repeatedly these days, and for good reason.
Right? The spotlight is shining brightly on crypto broker Coinbase. It's slated to join the S&P 500 on Monday.
That's a huge move. That's expected to bring significant attention and probably more liquidity into the sector.
Exactly. And not to be outdone, the trading platform eToro is thrilling investors with its IPO success.
Oh yeah, I saw that. And fintech upstarts like Chime are filing to go public too, right?
They are. So this trifecta is really stirring up a lot of excitement as the fintech ecosystem continues to push the boundaries of traditional finance.
It really feels like a turning point for that space.
Definitely. Now, in tandem with the fintech news, there's another intriguing narrative that's been resonating with investors: the rapid ascent of space tourism stocks.
Ah, yes. Virgin Galactic, specifically. Their stock is just skyrocketing.
It is. The company is anticipating that private astronauts will willingly pay, get this, in excess of $600,000 for a ticket on its new Delta-class spaceships.
$600,000? Wow. That's not just about reaching outer space. That's totally redefining luxury travel and experience.
Totally. For a moment, I thought my daily commute felt long. But then I realized paying $600,000 for a trip to space would put most morning traffic jams to shame.
Haha, that's a great point. Makes you rethink rush hour, doesn't it?
It really does. So while fintech and space tourism are taking the headlines, there's another story making waves that Bank of America has been vocal about.
Oh? What's their take?
They're talking about conditions emerging for these so-called, quote, unloved stocks to thrive. Their analysis points to emerging markets as the next hotspot for investors.
Interesting. So stocks that aren't the darlings of Wall Street right now.
Exactly. Suggesting that while they might not be popular today, the underlying fundamentals could lead to explosive growth down the road.
That idea of value investing in overlooked sectors, that's definitely resonating with many in the investment community who are always looking for that hidden gem.
It really is. And let's not forget the global currency market. The euro's performance has been under pressure lately.
Right, I've noticed that. Is that tied to U.S. yields climbing?
Precisely. The U.S. two-year yields, which were once sitting around 3.92%, have ticked upward to nearly 3.96%.
Okay, So that slight rebound in yields, that's impacting the foreign exchange market?
It is. The euro is sagging as investors flock to the rising yields on American debt instruments. It's this delicate dance between risk and reward, you know? Rising yields make U.S. assets more attractive, leading to adjustments across the board.
And for anyone who's tried to follow the bond market, you know that even a few basis points can feel like a roller coaster ride.
Absolutely. Now that we've covered these broad strokes, let's dig into a more comprehensive coverage of our top stories today.
Sounds good. First up, that fintech sector we mentioned, it's really being invigorated by multiple developments.
It is. Coinbase's impending inclusion in the S&P 500 isn't just a milestone for the company. It really symbolizes mainstream financial acceptance of digital assets.
That's a great way to put it. And investors are also buzzing about eToro's initial public offering, which has reportedly exceeded expectations.
And Chime's recent filing to go public adds to that momentum. These stories truly underscore a broader trend. Technology and finance are merging in ways none of us could have predicted even a decade ago.
Right. If you've ever wondered whether Wall Street is ready for a touch of Silicon Valley magic, the latest developments in fintech might just answer that question.
Definitely feels like it. Next, we have the space sector making headlines again. Virgin Galactic, long considered a pioneer in space tourism, is seeing that surge in its stock price.
And they're touting those new Delta-class spaceships, promising unprecedented access to space for private individuals.
Yes, imagine paying over $600,000 for that experience. It's an audacious move, reflecting an industry that's as much about innovation as it is capitalizing on the human desire for the extraordinary.
It really is. The question for potential investors is whether this high-risk, high-reward play will continue to defy gravity, or if the market will experience a meteor shower of volatility in the near future.
That's the million-dollar question. Or the $600,000 question, I guess. In our next story, we have that interesting take from Bank of America we touched on earlier.
Ah, yes, the unloved stocks in emerging markets.
Exactly. According to them, emerging markets are poised to become a fertile ground for growth, especially for those stocks sidelined by mainstream investors. Their analysis suggests geopolitical shifts and technological advancements are creating an environment for these stocks to see significant rebounds.
So the idea is that while they haven't received the same attention as blue-chip companies, the underlying trends indicate substantial growth potential?
That's right. From a risk management perspective, capturing value in overlooked areas is akin to finding hidden treasure, provided investors are prepared for a bumpy ride.
Good point. It's not a smooth path, but the potential reward is there.
Exactly. And then there's that ongoing battle in the global currency markets. The euro, as many might have noticed, has been facing headwinds as U.S. yields continue their incremental climb.
And while that might seem like a minor adjustment on the surface, the implications are pretty far-reaching, right?
They are. A rising yield environment in the U.S. attracts capital globally, leading to a stronger dollar and putting pressure on European currencies. For multinational businesses and investors with interests in both regions, this tug-of-war poses both risks and opportunities.
The nuanced interplay between interest rates, bond yields, and currency valuations, it's really critical for those who view global markets as an interconnected web rather than isolated silos.
Absolutely. Building on these developments, let's take a look at some detailed sector analysis, specifically focusing on technology, energy, and finance.
Okay. In the technology sector, fintech remains the standout star, wouldn't you say?
Oh, definitely. The rapid innovation from companies like Coinbase, eToro, and Chime is really blurring the lines between traditional banking and modern digital transactions.
Investors are increasingly drawn to these companies, betting that the evolution of financial technology will disrupt established paradigms for years to come.
There's this clear narrative that the future of finance is deeply intertwined with advancements in technology, and the evidence is all around us. As traditional banks scramble to update their systems, new players are stepping in with innovative solutions that are both faster and more efficient.
It's almost like watching a well-rehearsed game of chess, where each move has the potential to redefine the entire board.
That's a great analogy. Now, turning our attention to the energy sector, while the headlines might not be as flashy as fintech or space tourism, its importance in global markets is undeniable.
Right. With ongoing shifts in global energy policy and that slow but steady transition to renewables, traditional energy companies are facing unprecedented challenges.
Exactly. Investors are carefully weighing options between established giants and newer entrants trying to capitalize on the green revolution. Corporate sustainability has moved from a buzzword to a vital business strategy, and that shift isn't without its controversies and challenges.
It's definitely a sector in transition, kind of like an old friend, reinventing themselves for a new era.
Haha, good one. You might even say traditional oil companies are learning how to dance to a brand new tune, one that's sometimes more jazz than rock and roll.
Love that. Meanwhile, the financial services sector continues to offer intriguing opportunities, despite its own challenges.
Yeah, aside from the fintech explosion, traditional banking institutions are recalibrating in response to digital transformation. Bank of America's commentary on emerging markets underscores that broader trend. Investors looking beyond the established giants to find value in undervalued stocks.
And while it's not a guaranteed path to riches, history shows that savvy investors who identify these shifts early often reap significant rewards.
That discernment is even more critical today, where rapid technological advancements can quickly alter competitive dynamics within any sector.
So let's take a step back and consider the global market implications of all these trends. In today's interconnected economy, what happens in one region rapidly influences markets worldwide.
Absolutely. Rising U.S. yields affect global currencies, while fintech and space tourism capture investor attention from New York to Tokyo and beyond. As investors, it's important to appreciate that while headlines focus on isolated stories, the undercurrents tie these developments together.
Global capital flows, tech innovations, shifting geopolitical landscapes. They're all part of this intricate tapestry investors must study meticulously to stay ahead.
From an expert's perspective, we're living in an era of constant change. Analysts and portfolio managers are keeping a close eye on the dual trends of rapid tech innovation and emerging market opportunities.
The promise of new tech and fintech, coupled with space tourism and energy debates, creates a vibrant but challenging environment.
So, what does this mean for your portfolio? Many experts suggest considering diversification not just across asset classes, but also geographies and sectors.
That's a great point. If one sector stumbles, the excitement in fintech or the gradual improvement in emerging market stocks might help cushion the blow.
It's definitely a question worth pondering as you review your strategy. And let's inject a little humor here, because frankly, if we can't laugh a little at the absurdity of paying $500,000 to orbit the Earth, then what can we do?
Haha, true. I sometimes imagine the conversation between investors when they first hear of a high-priced ticket to space. One might say, well, at least I won't have to worry about traffic.
Exactly. The reality is, innovation often comes with a side of risk and a dash of unexpected humor, and that blend keeps the markets as exciting as they are unpredictable.
Moving on to further expert insights, it's essential to consider potential future scenarios shaping our markets.
Right. With fintech at the forefront of this tech revolution, many experts predict even greater integration of digital finance in everyday transactions.
But with such rapid evolution comes increased regulatory scrutiny. How will governments balance innovation with investor protection? That's a big question.
It really is, and it will keep analysts busy as new data and policy proposals emerge. Similarly, space tourism raises fascinating questions about our collective appetite for frontier experiences.
Although private space travel is exciting, it forces us to think critically about sustainability, extreme risk, and scalability. Can the market support sustained interest in ultra-expensive experiences, or is it a bubble?
For adventurous investors, this sector could offer dramatic rewards if the stars align and the rockets keep launching successfully.
And the narrative around emerging markets continues to evolve. Bank of America's analysis of unloved stocks reminds us markets are cyclical.
Absolutely. Undervalued opportunities today may become breakout stars tomorrow. With economic policies shifting and new data emerging weekly, investors must remain agile, continuously adjusting their outlook.
In many ways, investing today is like navigating an intricate maze, a challenge that, with discipline and insight, can lead to rewarding outcomes.
As we explore these sectors, considering the interplay among tech innovation, global dynamics, and traditional fundamentals is key. Fintech advancements aren't isolated. They're influenced by consumer behavior and regulatory reforms.
Likewise, the energy sector's transformation is as much about environmental stewardship as market adaptation. By considering the broader picture, investors are better equipped to anticipate movements and position portfolios.
Reflecting on all this, A key takeaway is the value of a diversified approach in this dynamic and unpredictable landscape.
Whether you're passionate about digital finance, excited about commercial space travel, or seeking underdog opportunities, there's a wealth of opportunities for those willing to put in the time and research.
As I always say, knowledge is power, and the more you understand the interconnections behind these market trends, the better your investment decisions will be.
Before we wrap up, let's quickly review the key points we covered.
Okay, we started with the market indexes, S&P 500, Dow, Nasdaq, and the steady performance of Bitcoin and Ethereum.
Then, we delved into major trends, the fintech resurgence with Coinbase, eToro, and Chime.
The surging interest in space tourism through Virgin Galactic's ambitious plans.
And how traditional sectors like banking are seeing promise in unloved stocks, especially in emerging markets.
Finally, we looked at global implications, including the impact of rising U.S. yields on the euro and the broader interplay of international market dynamics.
As we bring our conversation to a close, I'd like to leave you with some thought-provoking questions.
Okay, shoot.
In a market where technological innovation is merging with traditional finance at lightning speed, how do you balance ambition with caution?
Good question. And are you prepared to invest in sectors like fintech and space tourism, which represent a blend of the tried and true with the experimental?
And in an environment of rising yields and a shifting global currency landscape, what strategic moves will you consider to safeguard and grow your investments?
Really makes you think, doesn't it?
It does. Thank you for spending these past minutes with us on the PAI Morning Briefing. We hope you found our discussion insightful and, yes, even a little entertaining.
Remember, your portfolio is your story, and every market move contributes to the narrative of your financial journey. And as always, Pantheon AI is here as your information co-pilot, ready to guide you through the twists and turns with expertise and a touch of humor.
Before we sign off, just a friendly reminder to come back for our next episode tomorrow. The market never sleeps, and neither do our insights.
And if you ever have any questions or need further clarity on today's discussion, don't hesitate to reach out to our AI co-pilot. We're in this together, navigating the world of finance one insightful conversation at a time.
And finally, remember, learning shouldn't feel like a full-time job. Stay curious, stay informed.
And until next time, happy investing. Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.